higher time frame approach that I'm looking to implement, which is basically somewhat of a derivative from what I originally was working with, but I think needed a bit of fine tuning, let's just say. Anyway, I'll just start fresh again, because I think this is a really good example. I've already been over this yesterday evening, but I had been at this a long time to even get to the understanding of this yesterday. But anyway, starting with the economic calendar, your main tool. Obviously, we're doing the April 6th to April 12th week. You see that there's nothing until Thursday. So I would come to the charts as of the Wednesday, and of course, obviously, as of the Monday anyway, to determine, what the score is with just like what price action is expected for the week, and then basically after you've determined and established whatever that is, you then get into the nitty-gritty part of determining how the framework of that week would be most appropriate to see it set up like, to then get on board it, which is always something to do with AMD around the economic calendar. And usually the day before, you'll be assessing how that framework is set up. Are you still in the consolidation? What time frame is that consolidation even most clear on? Have you already had the manipulation prior to the news event, etc., etc.? So let's go into it. So anyway, we're doing the 6th of April, or rather the 7th April week, intraday week. So starting off with the dollar, I put just as much emphasis on the dollar as I do the yield, which is basically inverse bond price. So anyway, you see that the dollar is likely to fall relative to TT trades wise, meshed with consecutive bar push analysis. You see that the most recent bar close as a nice range expansion bar to the downside, closing beneath previous weekly low, and just it just looked good to continue lower. Pairing that up with the yield. Actually, I won't need to go back, I already know. Yeah. So with the yield, same thing, it just looks good to come lower. Looking at the bond price, the yield gives a bit more of a better visual, but to be honest, this wick rejection would probably, it's a bit sus actually, to be honest, but you could maybe just look at the monthly too. It seems it's like the start of a new week, start of a new month. So yeah, you're looking at April. Wait, am I doing 2025? Yeah, good. Damn. That would have been rough. Yeah, so monthly bond price is likely to rise. Yeah, it looks good actually, a rise. It looks like it's probably going to probe a bit higher into this FEJ, possibly tap into this OB. Anyway, that's just secondary level parameters that I'll then look at after I've analysed how this bar closed with a healthy amount of bullish signs. It's just likely to continue higher. Also, it closed above previous weekly high. What does that mean? The draw is this, and also relative to consecutive bar push and play, it's also likely to go higher. Then relative to the monthly yield, it is the same thing. It's just, but it is a bit different. But based on the bond price being the way it is, I would anticipate, I would just based on consecutive bar push wise, I would say, yeah, it's likely to go for the low. Then anyway, yeah, looking at the dollar monthly, the dollar monthly is also likely to come lower. So yeah, anyway, we've got that established. Now basically what I would be doing is waiting until Wednesday. So what we can do is, we've done the weekly outlook, we are sat on our hands till Wednesday. So this is the beauty with this, because we are focused on only taking very high probability setups basically. So I would then start off with the dollar. We've done the bond work. I guess we could look at this again, weekly yield work. You could also look at the bond work, bond price. Well, look at this. This actually looks really good to go higher, but we've done the work as of the Monday, and determined the direction. So I would stick with that. And then anyway, what we'd be doing here is determining the framework of the given week as of the Wednesday, which is the day before CBI, right? So basically what I would then be doing is dropping down on the daily as of the Wednesday, and I just start doing my analysis, right? I'd be in no no, I would never be in a rush to take a trade in this way, with this approach anyway. But basically, I would just start filtering through my time frames and see, like, kind of, you know, what sort of price actions went on as of the Wednesday, and see whether, you know, we've had the consolidation or we've had the manipulation, and also determining what time frame the consolidation is most visible on. Now, anyway, as of the Wednesday, you know, you come to the charts, you'd probably come to the charts at, you'd come to the charts about here, something, well, actually, it would be about here, and, well, you'd be coming to the charts within this bar, and you see that, you know, you're just kind of consolidating, and, I mean, you're kind of just breaking out of this range, so to be honest, and this is, like, it's just not really that nice. So basically what I'd be waiting for is I'd be waiting for the manipulation above here, but then anyway, and I'll just be sat on my hands basically, but then anyway, as the market starts, you know, playing out, like, you start to see it, like, chop around, and then, like, I would also be looking at the lower time frames too, like, as of the Wednesday, and you just see this consolidation mess, and you're obviously also breaking out of it, like here, so you be coming to it here, and you just start to see this, so you're kind of just breaking out the opposing side. So then again, like I just said, I'd be waiting for the manipulation, it's, you know, so I'd just be sat in my hand. But then anyway, as the market starts going, you kind of start to notice a little bit more of a consolidation, which kind of becomes clear. Yeah, it definitely does become clear as of, like, here. You know, probably even this black bar, so 2 o'clock. So then if you drop down to the 1 hour, 2 o'clock. It probably is clear. So yeah, you come to the charts, you would just be seeing this. I would start to see, hang on, this is kind of like a further new consolidation going on here, right? Starting from around here. So I'd be looking at this, and then anyway, I'll be like, yeah, this is, I'd be just waiting, and then I'd be seeing, like, as of this, yeah, this is a clear consolidation, and then anyway, you start to get the breakout. You got the news on Thursday. I know I said that really weird, but anyway, you got the unemployment claims, and you got CPI at 1:30 on the Thursday. Obviously, like, we would be dropping down the day before just to see the framework of how the week's setting up. And then anyway, you start to get the breakout. So then basically what I'll be looking for is a displacement relative to the time frame, like, chart perspective, that, like, the consolidation that I'm looking at is most clearly visible on, and that's the 1 hour. So then basically what I'll be looking for is basically just some sort of a displacement, which, you know, you don't really get, like, if you then go to the 30-minute even, you could get some help off the 30-minute. Honestly, just relative to the clear consolidation being on the 1 hour, I'd be really less inclined to, you know, yeah, I think, yeah, honestly, I would just go back to the 1 hour. I'm not seeing anything here. And just like what I had marked, and obviously that's the draw. Just like what I had marked, I just would take this inversion basically, and wait for the close, and then enter, and I would have my stop. You know, to be honest, like, an appropriate stop would even be here, but, like, I would just place it around this high, really, to be honest, give it a little bit of a room. But, like, realistically, you know, like, it's a key news event. You've had the consolidation, manipulation, and you've had this kind of strong displacement. To be honest, like, you know, strong close. Yeah, I would honestly stick my stop about there, and that would be a decent invalidation, to be honest. So, and then I would simply just target the weekly draw, simple as, and basically wish for the best from there. But then also, what I would be then doing on this day, which was a Thursday, which would then get the like nice close, is I'd be then looking at Euro GBP before this, because obviously you have to execute on Euro or the pound, right? So then what I would then do is, as of the Thursday, which is when we then get the displacement, and that's when we're then looking to like take an entry. Let's just see if I've got a 1 hour. Okay, no. I'll just mark this. Like, you've got a clean FEJ. I'll just mark it 1 hour. Oh god. 1 hour, this is orange good. So you've got a clean FEJ, and you also have a clean displacement, to be honest. Like, it is good, but it's just a bit iffy with regard to where it formed within this, like, actual consecutive bar push leg. It's right at the lows. But then, you know, with all your analysis and stuff, it is likely to go lower. So basically, when you see this at, which you would be looking to get involved at 9, well, first of all, actually, you know, manipulation, yeah. I would just basically be tracking dollar until dollar sets up. So realistically, like when I see this bar as of 8, I would be coming to the Euro GBP as of the Thursday, and well, starting top down basically, but like going to the daily just to see how it's kind of going. So we are dropping down to the 7th. So I can see, straight away that like that euros is stronger, but then you come to the charts on the given day, and then it looks like euro is kind of weak. But that obviously doesn't materialize. But obviously we go based on emulating real time. If we were seeing this, is what we'd be thinking, right? But then if you just go to the monthly real quick, so you're obviously going as of April. Monthly is bullish, based on consecutive bar push wise. You know, you kind of push lower, you just consolidate at the lows, but it's down at close, and then you go to the weekly. The weekly is clearly bullish. Yeah, this would be a real iffy one based on the weekly and monthly, and then the daily set the way it is. I mean, I would just be going accordingly here. So, I'd probably go to the 4 hour. Okay. Oh my goodness, like this is not nice at all. So yeah, as of 8. But oh god. Honestly, I would probably be going inclined with the euro, just based on the weekly, and the monthly, and then, you know, kind of just seeing this. So therefore the euro is the stronger asset. You're looking for pound to sell. So then basically what you would do is you just start to plot out the framework for the week on the euro and the pound. The pound and euro, by the way, USD of course I'm referring to, like, it's just a tool for you to actually execute your dollar analysis on. Like literally, you're literally trading the dollar with this approach. You're not trading, like, you are trading the euro and pound, but like you're actually trading the dollar. But anyway, so doing my analysis, euro. So yes, the bias is the high. Let's mark it out. It is the high, and then anyway you drop down to the daily. It's also the kilo range daily. Maybe, but anyway, that's kind of irrelevant. Ignore that. And then anyway, as of Thursday, yes, it does look kind of bullish. Look at this, nice quick rejection at the lows of an implant and push to the downside. It just does look good to go higher actually. But then anyway, you're just doing your analysis. Remember, you're literally executing your dollar analysis on the stronger in this case stronger, because like if dollar is weak, then theoretically euro and the pound should be stronger, but then you filter out which one to go based on euro GBP, which shows you who is buying euros using pounds, basically selling pounds, or who's selling euros for pounds, basically buying pounds, getting rid of the euros. So anyway, yeah, as of the Thursday, this is clean actually. I'm surprised if my standard strategy also didn't present a good trade on this day. But yes, anyway, you're coming to the charts as of the Thursday, and you're looking to execute your dollar analysis. So anyway, okay, yeah, actually I see this looks good instantly. So yeah, you're looking at this, and I mean I see a consolidation, and I also see one here. So if I just turn this off like this, so you got a consolidation there. That's your original one, which like you see on the dollar consolidation. But then you also see this, which again is obviously better visualized on the 1 hour. I'm just going to drop straight to the 1 hour, because this is the time frame that you would be looking to execute on the DXY. Just doing everything you do on the DXY. Wait, what? Oh yeah, this is don't know what that is. Ignore that. That's retardedism right there. Yeah, so this is beautiful stuff. You see a clean, when you got a clean draw too, you see a clean consolidation on the dollar, and obviously you're looking to execute what you found on dollar on the euro, because that's a stronger pair, and you're not coming to the charts till the till 9 o'clock basically, right? And anyway, you're looking at this FEJ right here. It's the same as dollar, literally. It's the same as dollar. Like, I'm not just saying that in this case. It's like the protocol that you do is the same as dollar. Like, that is true, but this is literally the same as dollar, right? And then anyway, you close above, and then basically what I would do with this is even more clean than the dollar, to be honest. So this is good, as soon as that pair that we're actually looking to execute upon. I would just simply look to have my stop about here, but then the risk to reward isn't really favourable, is it? I'd probably just go for a 1 to 5, 1 to 1.5. Yeah, and I'd have my stop about halfway of this wick, just to you know what? No, I would just have it there. I just have it about this wick, and yeah, you just basically go for that. So it's not a crazy risk to reward, but like, based on my data and stuff, when I get more, and I have like about a year and a bit's worth of data, I will possibly have risked 2% on this trade, so therefore that's 3%, so it is worth it, that's for sure. And because I'm only looking to take high probable setups around the economic calendar and the weekly framework, which is a bit in depth, I must say, like, your risk tolerance would be fine, you know what I mean? Look, it's not that much higher above going for a fixed 1.5. So yeah, anyway, this is the trade. Yeah,